Meanwhile, the blockchain-based digital assets were not included in the recent budget speech announcement by Finance Minister Enoch Godongwana, reflecting the little progress the South African government has made in addressing the regulatory measures needed to grow the digital assets sector that will benefit the South African economy. Wiehann Olivier, a partner and FinTech and digital assets lead for Forvis Mazars, joins us to look into how blockchain-based digital assets can unlock economic growth. Thank you so much for your time, Wiehann. When we talk about digital assets, do we mean the central bank backed digital assets? Do we mean cryptos? Do we mean stablecoins? Is everything in that definition?
Yeah, so I think if you look at digital assets specifically, it refers to blockchain-based digital assets. So it's any digital representation that's recorded on a blockchain, be it cryptocurrency, backed and unbacked, utility tokens, stable coins, central bank digital currencies that you're referring to. So the whole lot is encumbered within the digital asset definition.
All right. Well, it is quite concerning from your note. You mentioned that the finance minister did not include that in the budget. Just talk to me about, what these assets could unlock for the South African economy, really the opportunities that they present.
Yeah, sure. So I think the budget speech didn't specifically speak about digital assets, but when we look at the budget review, there was specifically a paragraph that addressed cryptocurrency as a whole. And of course, they mentioned that the Intergovernmental FinTech Working Group is going to focus on stable coins in 2025, and we do expect a report from them during 2025. But I think there's a significant amount of benefit that the South African government and the fiscal can reap from the asset class itself, specifically in relation to stable coins being utilized for cross-border payments, remittances, especially in instances where companies want to export goods and services, and to allow them to receive their remuneration in fiat-backed stable coins, of course, therefore increasing the overall cash flow of those businesses and, of course, casting their revenue net a little bit wider as well. I think if we look at the overall aspect of it, the question still remains is whether the South African government is going to incorporate something similar to what we see in US, China, and various other countries, where they hold other cryptocurrencies such as Bitcoin as part of a strategic reserve to hedge them against the devaluation of local fiat currencies, similar to the gold standard that we've seen in the past.
It's quite interesting that you say that stable coins were mentioned in a paragraph in the budget review, but also not really looking at digital assets holistically. Is this also just maybe signaling the slow progress that the Intergovernmental FinTech Working Group has undergone in terms of really paying attention to these assets?
Yeah, so it's interesting. I think the Intergovernmental FinTech Working Group released a paper back in 2021 where they specifically advised on specific regulations to be incorporated in the South African market to, of course, to adopt the asset class, allow for innovation, but also protect stakeholders and investors within the sector itself. Now, in terms of I think since 2021, looking up to 2025, when we expected the second report, there's been no real tangible efforts from the working group subsequent to that. Now, it's quite interesting as well that they are pivoting away from cryptocurrency and focusing on stable coins. Now, of course, they've given no indication of exactly what they are going to focus on, whether they are going to focus on elements such as exchange control regulations, whether they are going to look at it from a tax point of view, and also the utility of the asset class itself for this cross-border payments and remittances, as we mentioned. But also another element that they're not addressing or not hearing anything of is using cryptocurrency to make investments into South Africa. And we've seen this in practice as well, where foreign investors want to invest in companies in South Africa. Of course, the African Reserve Bank doesn't allow those investments to be made in cryptocurrency or any form of cryptocurrency, rather, including stable coins. And we've actually seen instances where investors had invested in businesses in South Africa, and the Reserve Bank actually asked them to reverse those transactions and to facilitate it by the normal banking rails, to place it on record with the Reserve Bank. So it's going to be interesting in terms of what they mean when they're going to release a position paper on stablecoins and what this means for South Africa. We've also dissected a little bit and asked the question, is it going to be towards a case of more regulations, or let's say guidance on regulations in terms of the issuers of stable coins in South Africa as well? But once again, there's not a massive demand for the South African rand in a digital format that's housed on a blockchain. There's very low liquidity currently in South Africa as it stands.
Well, at this point, looking at all that's been done so far and all that still needs to be done, is South Africa really still maintaining its stance of being a follower rather than a leader in that digital assets landscape? But also, could they not do more to be at least the first follower?
Yeah, I think definitely they can do more. I think the efforts thus far has been futile, to be brutally honest. If you look at the regulations and the way the other countries are moving in adoption and regulating the industry, South Africa is lagging a little bit behind, but something more concerning is happening in the background. If you look at the amount of licenses issued since the licensing regime has been introduced in South Africa, there's a significant amount of crypto asset service providers that are being licensed in South Africa compared to the likes of Germany, for example, where there's only 6 licenses being issued. In South Africa, there's more than 93 licenses being issued in the first year alone. But I think back to the regulation of it, we need to see integration of regulations across the board. So fair and well, the sector itself is being regulated by the FSCA, requiring these crypto asset service providers to obtain FSP licenses. But in addition to that, we need to start asking the question, when are we going to see integration into other facets? So let's say, for example, utilizing stable coins for the exporting of goods and services. You need to complete URC forms and SAT 500 forms when you're exporting goods, but nowhere are you allowed to actually state there that you are taking receipt for those exported goods in cryptocurrencies. There's no third-party statements that can be provided. So it's all good and well that they create these legislations to govern the players within the sector, but we need to see integration into various facets to reap the real benefit of the asset class itself in South Africa.
Yeah, and really that integration into the formal financial sector in South Africa. Thank you so much for your time and for your insights there, Wiehann. That was Wiehann Olivier, partner and FinTech and digital assets lead for Forvis Mazars.